Hey everyone, it's live stream Tuesday and welcome. And in this live stream, we're going to talk some Bitcoin. We're going to talk some general stock market. I'm not going to put up as many charts today. I'm just mostly going to do it just like, hey, stand and deliver. And we're going to talk about how the markets have changed. And so, I put up this title 100,007 days. And it's really driven by this idea that we always program ourselves to think like, oh, everything will just go steadily higher. But just think back like a week ago, out of nowhere, GameStop stock goes from what? Like a few dollars to $50 or $60. And it happened like that, right? It happened like that. According to the way we have programmed ourselves and all the formal stuff, that's all not supposed to happen. And why did it happen? Well, it's the same thing that underlies Bitcoin. And I'm going to get to it in this live stream. So let's just quickly do all this stuff that the lawyers tell us is critical for you to know and important for you to know, which is that this live stream and the content from ATG Digital Media is not investment or financial advice. It is presented to you as opinion. Use it for yourself as information, engagement, or entertainment. All ATG Digital content may contain errors, oversights, or mistakes, so don't take it as God's word from above. We are human beings, and we can make mistakes. Understand that investment operations, what is that? Well, buying or selling a stock, doing a crypto buy or sell, or a trade in the options market. They have significant risk and can lead to the loss of your principal. The owners, the employees, contractors of ATG Digital Media, we own, trade, and transact the securities that are mentioned in this video, and all the content from ATG Digital Media, which includes our portfolios, updates, all those good things. Finally, this I've added quite recently because there's been a scandal in the previous business I used to work with where people have been taking money from companies to recommend them and crypto promoters. And I can say we do not do that. Very quickly, we put out a lot of content. Substack daily, we're very diligent in that. Ballman speculating, it depends on how much energy I have. I always have a lot of ideas, don't always get to it. YouTube, I'm on here at least once a week. Social media, I'm on X. Follow me there. I put up a lot of stuff. Instagram, very infrequently. And Dean is very active on Facebook under the Paul Manpilli Guru account. Okay, so I started with this example, right? I mean, GameStop stock. Let me just look this up. Like, where was it actually? I mean, I'm not going to put up the chart. The GameStop stock was at $10 on April 15th. And in the space of 3 weeks went to $64, right? Why did that happen? Well, I mean, so if you read social media, why this happened? Well, because Roaring Kitty, which is the moniker of this guy who's actually a very sophisticated investor, he's a financial advisor. He suddenly resurfaced on social media and started to tweet about GameStop. And suddenly GameStop stock in the pre-market was up, I don't know, 30 or 40%, maybe even 100%. And it followed on with days and then like a couple of weeks. And now it's back to what? Like, $25. So still 100% gain. All right. So you've got like a few things that like happened here, which is one, you can see the role of social media. You can see the role of influencers, if you will, in finance. And what else do you see that you know about from me, which is the role of demand and supply, right? What was going on with GameStop that could make it jump from $10 to $64 in the space of like a couple of weeks? Well, one, obviously, you had someone that the market cares about and believes is knowledgeable about GameStop stock come on social media, and where people pay attention to this person because they believe this person has some understanding about the stock, some understanding about the market, and has a very strong and clear viewpoint about this, coming and starting to put new information out. The market and all the folks who have learned about GameStop and who hasn't, right? I mean, from 2020 and 2021, like that, the meme stock thing is like the thing that many people would remember. So of course, GameStop, like, people are aware if GameStop stock moves, everyone's paying attention. Old school legacy media, CNBC, Wall Street Journal, everyone's paying attention. So, and then there are a lot of people that bought into that idea and experienced very rapid gains very, very suddenly. And so they're paying attention. So the moment that all of this happens, what goes on? Well, people come in and they start buying GameStop and they start buying calls on GameStop. And of course, what does this do? And this goes to the last part. What it does is that it terrorizes the market makers. And if you don't know like how markets are run, like many people think like, oh, you put your order in and somehow magically, this gets filled. No, there's an entire machinery behind your broker, where your broker sells that order to someone that can fulfill it. Remember, your broker doesn't keep inventory of all your favorite stocks or some tiny stock that, only trades 10,000 shares a day. No, I mean, they have to find somebody to fulfill that order to give you your shares. So there's like an entire machinery, a whole set of, like financial intermediaries that provide this role. And when market makers suddenly get a very large order, right? Let's just say like today, one of our stocks in the silver tier, Chewy, is up because Roaring Kitty of GameStop fame apparently has taken a position in Chewy. So today, all the people that were paying attention to him because of GameStop, they're like, he's in on Chewy, we want in. And they're buying. Well, there's a huge surge in demand for Chewy today, Chewy stock today. I mean, where are you going to find all this Chewy stock? So a market maker has like, a few choices when like this kind of like sudden surge of demand comes, which is like, I have to get this out from somebody else because how many other sources are there for a stock? Well, the company is a source for the stock. They can issue stock, but company's not issuing stock every day. So like, I mean, if a very large order comes in, yeah, I mean, a company is not a source. A natural seller, somebody who owns Chewy, they bought it, either they've made money or they lost money and they want out. They have, this price gets hit and you sell. But minus that, if a large order comes in for, let's say, $100 million worth of Chewy comes in, let's say at 10 a.m. today, right? That goes into a broker, and now it gets pushed out, right, to the general marketplace where it's got to be fulfilled. And the market makers, there's more than one. There's not just one single market maker. They look at it and they go, well, we have really one choice. We can walk away from the business. In other words, not take this order and fulfill it. We can go short. In other words, we will sell you Chewy today for whatever some price, and we're going to leave ourselves kind of naked, right? Because if the price keeps going up, that's a loss for them. They can like mix it up, go short a little bit. In other words, plan to buy back Chewy at a lower price at some other point and square the books. They can use the option markets to kind of like get cheap options so that they get delivered Chewy stock in the future. But underneath all of this is, is demand and supply, right? Is demand and supply. I mean, oftentimes the market makers into this will be like, you know what? In today's world, some of these things is playing with fire, right? Especially when there's already a very large short position. What's a short position? A short position is when there's a large bet against the company. For For example, in 2020 and 2021, there was a huge short bet against GameStop. And that is what triggered those extraordinary gains, because people were betting on GameStop going bankrupt. And instead, everyone came to buy the stock, right? Yeah, people who had short the stock were expecting the business to essentially go to zero, for more and more people to join them in selling the stock down, to zero. But instead, the opposite happened. So everybody was caught off guard. You've got all these people that had sold the stock with the idea of buying it back cheaper later. And so as the price goes up, their losses just are getting like marked up more and more and more. And then any number of market makers who anytime somebody was buying GameStop, they were like, the analysis of this company is going bankrupt. We'll just go short the stock ourselves, because we'll be able to buy it back cheaper later. Yeah, surprise. Surprise. It turns out that there's a large, rabid, huge following for this stock, and people come in and they're buying and they're buying, and they have a leader, and they have a social media channel, Wall Street Bets on Reddit. Roaring Kitty's the leader, Wall Street Bets, where there's new information coming on, and more and more and more people are just piling in, right? Sending it higher and higher. Bottom line, all right, to this very long story is this. The markets today are completely different than they were, I don't know, even 10 years ago. 10 years ago, the idea that this could happen, if you told somebody, they'd be like, you're crazy. It cannot happen. So markets today are ruled by social media. They're ruled by influencers. They're ruled by, extraordinary amounts of information that almost anybody can get. Like, people send me, it's like, Paul, what do you think about the short position in this stock? I'm like, how do you even know this? I can tell you, like 10 years ago, most people didn't even know what short position was. They didn't even know what a stock that was short was. But there is an extraordinary amount of information now available because of social media. You can go to YouTube. Heck, you can watch me. And there's all this information being provided. People are very aware, and they're making bets that are not always about the old school, like, oh, the earnings will go up and the sales will go up and like this, and like the analysts will give me an upgrade. No, like today, stocks just gonna rip higher because somebody like Roaring Kitty likes it. Yeah. So like that's a big change. And people say, well, Paul, that's wrong. That should not be. Listen, folks, I've always told you, it's like, in the end, a stock, in terms of what, it matters to you, to me, to us, is what somebody else is willing to pay for it. Because when you sell, you need a buyer on the other side for you to take your gains and to make it real. I mean, to see prices get marked up, yeah, there's some satisfaction in that. But if you never book the gain, obviously, you don't get the benefit from it. So demand and supply, which was scorned really as like a thing to focus on, has become the central idea in markets today. In other words, yeah, I mean, a stock can stay at very high levels for, maybe years, maybe a decade, as long as people are willing to support it and keep it at that price. That seems like heretical, like a conspiracy theory, like a wacko, bizarro world, but that is the world that we're living in. And in that world then, you would approach the market slightly differently. Yes, sales growth, earnings growth, those are all important things, but you have to consider different elements. Now, last week in the live stream, I put up this extraordinary stat, which is that 15% of all trading in the markets is in penny stocks. 15%, right? And a lot of that 15% is stocks like this. People are willing to follow people into very small stocks, bid them higher, not care about conventional metrics, sales or earnings. XYZ person, maybe one day that'll be me. I'll have a large following. There'll be 100,000 people watching this live stream, and whatever stock I put out immediately after, boom. Yeah, I mean, that's the world we're living in, because I mean, if Roaring Kitty can move um, Chewy by 20% today, because it turns out that yeah, he owns it, and I believe he's going to do a live stream about this. Well, I mean, Kitty stock is going to rocket higher, because I think on his last live stream he had 500,000 people on. 500,000 people who believe in him, have had some experience with it. They may have not all made money, but nonetheless, they found his way of conveying the information to be useful, interesting, engaging, entertaining. And they were like, yeah, you're making a reasonable case. And, I'm not betting the farm here. I'm going to throw like, yeah, whatever. I'm going to buy $1,000 of stock, or maybe I'm going to take $1,000 and I will use the options market to try and just hit it big all at once. And last week, I also showed you option volume trading is like wild. I mean, it's bottom line to all of this, and an entryway to really what, I'm going to say like is obviously a place where this is in play, is that the markets are completely changed. And that means that you have to like look at the world like through the eyes of like the way the market is today. And in that world, demand and supply are like the primary things to focus on. And in my judgment, in my opinion, there is no better example, no better case of this than Bitcoin. And I'm going to put out something that, yeah, I mean, I'm sure I'll get ratioed like crazy if it doesn't happen. But look, folks, I can tell you, if GameStop can go from 10 to what, like 60, right, in the space of a couple of weeks, yeah, Bitcoin can go from 64 today to 100 in a week. I mean, I don't think I'm putting myself out there to say it. Now, people are like, well, why? We all want like these magic. Yeah, I mean, because Bitcoin is the most demand and supply oriented coin, oriented investment, speculation, whatever you want to call it, in the world, right? I mean, there's nothing, I mean, in the end, it is a finite coin. It's a digital coin that is driven entirely, almost the entire value is driven around the idea of scarcity and demand and supply. The reason that people desire it is because it was first, and it was the first digital currency that was like, yeah, transparently scarce. And that's kind of like what made people go and pursue it and then buy it, right? And everything about it is known. In many ways, Bitcoin, you don't need a person to be the influencer for Bitcoin. Bitcoin is the influencer. I mean, Bitcoin is a bigger brand than Roaring Kitty. Bitcoin is arguably the best financial brand in the world. I mean, there's not another investment. There's not another speculation, a bet of any kind that you could walk around pretty much all around the world and say like, hey, do you know what Bitcoin is? Or do you know Bitcoin? Don't ask them what Bitcoin is. Do you know Bitcoin? And the vast majority of people, whether they own it or not, they've heard of it, right? They've heard of it. And also they know somebody that went and bought enough of it and got wealthy through it. And you can see it's the same story as GameStop in the end. Influence, people seeing that this is a known way to make money, to get rich. And so when anything happens, there is a natural amount of attention that goes into like paying attention to whatever news, whatever event, or even if it's just the price movement. And that then brings more and more people into the market. And so then there can be a very sudden jump. Now, many people in the last few weeks, yeah, especially, I'm just like, oh, Paul, Bitcoin's just not doing anything, I think like the halvings, this was just crap. This cycle is going to be different. All these things, I can tell you certainly at 70, when it was like at 73,000, 3 months ago, nobody was saying that. But at low prices, yeah, I mean, we're human beings, right? I mean, we want excitement, we want fun, we want to see our accounts go up. And yeah, I mean, and when prices rise, our spirits lift, our sentiments lift. We look forward and we can see bigger prices, and any prediction, any estimate, any forecast seems believable. At low prices, instead we like, oh, whatever pessimism we can find online, that's the most believable things. As I like to say, I mean, we look up when we're optimistic and we look down when we're pessimistic. But Bitcoin today is $64,000, right? Just like break this down. And we've got, I mean, if you asked last year, it's like, well, what are the things that like are going to like be big factors for Bitcoin? Well, obviously there was the Bitcoin ETF, which, I mean, when I first came on and told people like, look, they're going to approve an ETF sooner rather than later. It's inevitable. And people said, why? Why would the SEC do that? Why would the government allow it? Why would blah, 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 blah. Bitcoin ETF done has something like $15.6 billion in it. It's not like 150 billion, but it's 15.6, which is, yeah, it's sort of like on the mid end of like what people were expecting at the current time. The bigger numbers were closer to like 30, 40, maybe even 50 billion, but like 15, billion is reasonable, So Bitcoin ETF, yeah, that acts obviously as a very easy conduit to take money in. That's important for new markets, right? I mean, for the new way markets trade, it's got to be something that people can access pretty quickly. Like GameStop stock is something that, I mean, like one of the big controversies, right, is the fact that when GameStop starts to rip, Robinhood, shuts trading down. Why? Because, well, I mean, they can't find market makers that want to fill the orders because market makers are too scared. They're terrorized. Like, well, like, I mean, I can't get anybody to sell me the stock, which means I have to go and do a naked short and I might get screwed, so like they shut down. So access is important. And today with a Bitcoin ETF, we have access. Previously, if you wanted to own Bitcoin, it's a little bit harder. Like to go open up a Coinbase account, you got to link your bank. Some banks won't link to Coinbase. Today, all of that is irrelevant. I mean, I think other than Vanguard, pretty much every major brokerage now allows you to buy and trade a Bitcoin ETF. And we have, 5, 6 liquid Bitcoin ETFs. So people can get in, right? So that's taken care of. In terms of branding value, in other words, influence, right? Bitcoin is, I mean, in my opinion, I can't think like, I mean, is Goldman Sachs better known than Bitcoin? Yeah, I mean, not in my experience. Like I was in Cambodia and Vietnam and Singapore last year. And I always made it a point, anytime I took they don't have Uber there, they have Grab. I always made sure to ask the folks that were driving me, do you know Bitcoin? Do you own any Bitcoin? So I think I met one driver who owned Bitcoin. Everyone had heard of Bitcoin. Everyone had heard of Bitcoin. And they were all aware of what it is. And they all knew someone that owned it and had gotten in early and had made a lot of money. This is important, right? Because that's social proof that like, hey, this is a valid, known, proven way by which you make money. And the whole point of bringing this up is this, which is like, we are closer than ever to what I would call, what like on social media is called a God candle. What is a God candle? Essentially, a God candle is like where the price just jumps from one level to a previously like it just blows our mind. Like, no, that's not possible. Like a $30,000 jump. in whatever, let's say a day, maybe it's a week. It's in some short period of time. This is like a God candle effect. I mean, like today's Chewy move is 20%, but GameStop had a God candle. It was up 100%. I think like in one of those like last week, I think there was a day when at some point it was up 100%. I mean, imagine that for Bitcoin, up 100% in a day, or maybe in a couple of days. So that means 60 to 120. Yeah, I mean, 60 to 120. Or, I mean, heck, if it went from 60 to 100, do you think that would get people's attention? Yeah, I think it would. I definitely think it would. And what will be the net sum of that attention? Will it be to sell? Yeah, I mean, I don't think so, because we hit a high in dollars for 73,800 March 14th, and we are now June 18th. So it is in excess of 90 days, which is a very long period of time for Bitcoin to not make a new high in a upcycle. In an upcycle is obviously my viewpoint, my opinion. We're getting on. The Bitcoin ETF, yeah, I mean, has 15 something billion. We've got now ETFs in Australia, very modest amounts of money going in there. We have a Bitcoin ETF in Hong Kong, reasonable amounts of money going in there. But the largest amount of money that's going to go into Bitcoin is going to be in US markets. We are the wealthiest country in the world. We have the most developed asset markets. We also have the greatest latent demand for Bitcoin, whether it be from the asset management industry, whether it be as a reserve currency from companies. That's bigger than than all pretty much all the other markets. So the demand trend is going to come from here. And what is going to drive it? Well, it's the same thing that has driven GameStop, which is that what do we pay attention to as human beings? We pay attention to price. We pay attention to price. Yeah, I mean, a God candle of whatever, let's say it's 40,000. I'm just doing 40,000 because that's easy to 100, but let's say, it's 100%, a jump. If it came in a day, ooh, I mean, would that have the world's attention? Yeah, I think so. I think the world would be like, what? What? That's not possible. That's not even supposed to be allowed. That can't be right. That's crazy. That's crazy. But in my opinion and in my judgment, we're setting up for this. Why? Because we've got this Bitcoin ETF, which is like taking in Bitcoin daily. Yeah, it's not every single day is not a positive flow day, but I'd say probably like 80-90% of the days since the Bitcoin ETF has been trading is taking in money, buying Bitcoin, making it incrementally scarce every single day. So there's people already with access to large amounts of money. I mean, these are asset management companies mostly that are putting money into Bitcoin. Retail is not yet paying attention to Bitcoin. These are asset managers that are like, hey, I mean, I'm gonna, I mean, I don't want to be left behind. Like if you're a financial advisor, and especially if you have younger clients, and they're aware of Bitcoin, they're aware of crypto, and you are not in it, and they're like, hey, I'd like some exposure. So asset managers are like, you know what? Just to shut my clients up, I'm gonna buy, 10 basis points. What's 10 basis points? 0.10%, right? In other words, barely anything, right? The more aggressive financial advisors are probably putting in 25 basis points. So that's 0.25%. The really, really, really aggressive, really, like going for it might be having like a 0.5%, maybe 1%. So what happens into a God candle moment? Yeah, I mean, everybody is filled with what? Regret. Oh my God, I should have put 2% in, are going to be what the aggressive people say. Everyone that has 0.1 be like, oh my God, like, before the quarter ends and before the clients come to meet me again, I better get 1% in. In other words, once you have the beginnings of this, there will be an extraordinary push that goes in, and you will have a movement that is scarcely believable. Is scarcely believable because Bitcoin is not constructed like regular markets. There's no official market maker for Bitcoin. I mean, people say that, oh, Coinbase and others, control the market. They might control the market in terms of, like, small amounts of Bitcoin back and forth. But if a very large order came in for Bitcoin, and a very large order for Bitcoin, I think it trades something in the range of, I forget the number. It's in the billions and billions of dollars every day. So let's say a large order came in, and then it was followed by another large order, let's say, for several $billion. Yeah, I mean, Coinbase doesn't have Bitcoin to supply that. No one does. Yeah, there's only one answer. It's a God candle. It is going to be a giant jump, and it is going to shock the world. It is going to stun the world that this happened, that this was even possible. And from there, there's only one way that the demand trend goes, and that's higher. Yeah, from there, no one that owns Bitcoin is going to sell anything. Okay, not no one. I'm going to say the vast majority of people are going to be like, yeah, I think I'm going to keep my Bitcoin here. It's at 120 and it just rocketed higher. I think I'm going to keep. So it exacerbates the scarcity even more. When we've just had the halving, that was on April 19th. And so we are just 2 months, May, June, 2 months past the halving, almost exactly. Tomorrow will be 2 months. In the meantime, Bitcoin's price in US dollars, which is the reference price. I mean, Bitcoin has made new highs in other currencies, since making its high in US dollars on March 14th, has made a new high. This is just going to be something that, like, yeah, I mean, the scarcity element, with the halving, with the higher price, is just going to blow people's minds. And with that, I think I have a good chance. I have a good chance that my estimate for Bitcoin, which is like, I have like made this forecast model, right? And it's based on the idea that the Bitcoin cycle is driven by the halving, because the halving is a known fact. It's a mathematical fact. It's unchangeable. It's there. It's not subject to opinion. It's not subject to anything else. The fact that the supply halves every 210,000 computing blocks, that's a known thing. It happens. We know it happened. We know that the new supply of Bitcoin has been halved. It's now 3.125 Bitcoin per block, or about 450 Bitcoin per day. So all this has happened, but we haven't yet had a demand response that's significant enough to really offset what has been, I have to guess, natural selling by folks who feel that they missed out on selling Bitcoin at 70,000 in 2020, which was the previous high. And so they're like, well, hey, I've made my money. I'm done. I'm out. And I believe that between them, probably some amount of inventory stocking prior to the Bitcoin ETF. And then, of course, there's also been the Grayscale Bitcoin Trust, because they've kept their fees so high. They of course have had liquidations. So between some combination, it's kept this price like tamped down. But every day I look, and I was looking today right before I got on. I was like, okay, 64,000. The crowd, the folks who attend the live stream, like, Paul, what are you talking about? It can't even get. But like, we're thinking too small. We're just thinking too small. I mean, the next big move is going to be like shockingly high. And it is probably going to come from low prices. It's not going to come from an all-time high. In other words, it's going to catch people off guard. And what is most people's inclinations? To sell at low prices and to buy at high prices. And yeah, I mean, you look at that GameStop move. It didn't happen from 40. It happened from 10. It happened from 10, from a low. It just happened. Why? Because it's driven by all the things that are new, different, unique to today's markets, which is that the investment's got to be known. There's a kind of brand or influence to it. It could be a person, it could be the thing itself. And ultimately, it's driven by people's desire to act on it. In other words, demand and supply. And there is nothing, I mean, Bitcoin is so much bigger than GameStop, right? I mean, it's so more known. I mean, the market capitalization of Bitcoin is like, I think 1.3 trillion, something like that. Yeah, I mean, it's going to matter. And it's going to come from a low price, because people selling at low prices be like, yeah, I mean, their viewpoint is going to be like, I'll get in when it's higher. Yeah, and you know what? And they will. The question is, how much higher? How much higher? And the longer this goes on, where we are in this range between, I think the low since the high was like 55, 56. So 73 to 56. Something in the 74 to 56 has been like, it's been like this, like this, like this, like this. So what's happening is like, well, I mean, the Bitcoin ETF and other buyers are like kind of like taking in the slow Bitcoin, and no one's that excited. No one is that enthused. No one is that optimistic, because of course optimism is driven by high prices, but big gains are driven from low prices. And in my judgment, in my opinion, yeah, 64 in hindsight is going to seem like a very low price. It's going to seem like a very low price. So bottom line to this live stream, yeah, God candle ahead. God candle ahead. That's my opinion. Before I open up to questions, when Bitcoin was rising, one of the regular questions I got was, well, but Paul, why are the miners' stocks like falling? And have you noticed that even though Bitcoin prices have not been making new highs, mining stocks are on fire, completely on fire? Why? Well, deconstruct what a miner is, right? And what they're going through, right? On April 19th, every single miner that primarily mines Bitcoin, what happened to them? Well, their revenue effectively halved. I mean, effectively halved. Now, some of them, bought additional capacity to try and rev that up, but effectively their revenue halved, right? So when you think about this, what are the companies that are most leveraged, meaning like that would benefit most from a God candle, or any all-time high? Yeah, it's these crypto mining companies, right? I mean, they need Bitcoin to be like, just to be level with last year, to be double, like where they were, right? Double. They need Bitcoin to be at 120, 130. In fact, I saw a statistic that the average cost of mining Bitcoin is now up to something like $84,000. $84,000. And generally speaking, from past cycles, when the Bitcoin price is below the cost of mining Bitcoin, these have often been trigger points for a transition shift in what happens with Bitcoin. Now, the other part of the analysis of like crypto mining companies is this, which is that the better capitalized ones have prepared for the halving. I mean, they knew that their revenue is going to halve. So they stockpiled cash, they raised money ahead of time. And then some of them that are more clever as well, and have the capability, they've also been holding on to their Bitcoin, because they're like, well, look, it's a demand and supply game. It's driven by scarcity. There's going to be a moment of extreme scarcity coming. And so if they have Bitcoin on their balance sheet, nobody talks about it. People talk about like, oh, MicroStrategy owns Bitcoin. Yeah, but the miners own Bitcoin too. And so they're very levered from every direction to Bitcoin. The fact that their stocks are moving up represents, in my judgment, in my opinion, like an understanding by folks who get the Bitcoin cycle that the move will come first in the miners, and the miners anticipate new highs in Bitcoin. Why? Because of the construction of their business, because of the nature of their business, because of how exposed their businesses are to the halving cycle. So, I mean, Dean put up something on Facebook the other day. He's like, one of the stocks that we recently put into, I believe, the gold tier, Iris Energy. Yeah, I mean, this is just rocketed up 50%. And like, I mean, since we put it in like a couple of weeks ago, it's just, why? Well, I mean, they've got a lot of cash. They've come to the market fairly recently, so they're pretty flush. And we've seen others do that. And if I'm right, this will continue to go. And then people will ask, like, why are the miners rising when Bitcoin has done? Which is kind of like where we are today. All right. Second bottom line, which is like, you want the biggest gains for a God candle. It's going to be in the miners first, but that's a trade. You'll need to sell them probably late next year sometime. Then it would be MicroStrategy. And then it would be probably Bitcoin, and then Coinbase and Robinhood, and then from there, Square and PayPal, approximately in that order. All right, let me see if anyone has questions here. We've got some comments here. From David says, second to like the stream before it started because I always like what Paul say. David, I'm very grateful for your support and patronage. Thank you. Let's see. David also is a big fan of Mankind Corp. And David, I want you and the folks in live stream to go check out my Substack from yesterday on Mankind. Mankind has a major event coming on Saturday. They are going to have the results of a clinical study that they did in patients that show that their insulin is at least 20% better for two major markers for type 1 diabetes. In my opinion, this is a game changer for mankind. It's going to be at the premier medical conference for diabetes, the American Diabetes Association annual conference. It's on Saturday. Am I expecting Monday for Mankind to suddenly be at $500? No. But what it will do is that when you have such a large benefit for a medication or drug, and you present it in front of the most influential large audience, well, what we'll do is almost immediately you'll see a pickup in prescriptions happen. And it will first be a little bit slow, but then with each quarter, it will be because it is driven by a real clinical benefit, a real medical benefit. The doctors, of course, they're going to pay attention to that because it means patients have fewer complications of various kinds. So this is almost like a relaunching of their drug, for the relaunching of their insulin, which is fast acting. It's inhalable. It was approved, I think, now almost 10 years ago. But anything new, it takes a long time in the medical system. Anything that's really novel, really innovative, because it's new, people don't know how to use it. You have to work all that out. So 10 years later, it looks like its time has come. And I believe it's going to change the trajectory of Mankind's business. They now have effectively control of two potentially multi-billion-dollar drugs. And the stock Yeah, I mean, in some ways, it's the same pattern. Like, I was talking about like before you have like a very large move, you tend to have like these ranges. And if you're paying attention to the asset and what's going on, you'd be like, yeah, it just doesn't price all this in. So very bullish on mankind, David, just to let you know. Um, Anthony says, I've been driving around West Virginia and the Carolinas last few weeks, hoping to run into Paul, but no luck. Thank you for the continued education. Well, if you see me, I'm supposed to be getting a Cybertruck. I don't know when. I put my original order in January. I saw recently that my thing on my app, they gave me a VIN number. So I've looked online, and apparently the VIN number is not necessarily a magic bullet. It can be even 60 days after. So if you see a Cybertruck, I know I'm going to get some sort of special plate on it. I'll let you know. If you see me, wave and say hi. And, if it's somewhere nearby, we can stop and have a chat. Mr. Magic Bullet, hi from the Netherlands. Well, hi to you, sir, and appreciate you joining the live stream. Raul says, hey, Paul, hope all is well. I'm sure you will touch on Bitcoin. Is this the time to load? I own BITO and IBIT. BITO, for those who don't know, that is the Bitcoin ETF that invests in Bitcoin futures. This is before there was a spot ETF. This was what you could buy. IBIT is the BlackRock Bitcoin ETF that follows the actual underlying Bitcoin. Bitcoin futures can be slightly lower, slightly higher than Bitcoin itself. So these are all there. So is this the time to load? Well, in my opinion, yes. But I also say, look, don't bet the farm. Keep your bets spread out, equal weight. I can't tell, I would never tell anybody to load up. I mean, if you're the type of investor that loads up, is willing to accept and the potential, obviously, for large gains, but also equally large losses, then yes. I mean, in my opinion, sooner rather than later, we're going to have a very large move. I mean, we're getting more and more what I'll call supply compression, right? And so all we need is something to hit. Maybe it's some event, maybe it's a country that announced it that flips the demand and supply balance so significantly. And it wouldn't necessarily be because it has to be so big, because the supply compression between the halving, between the amount of Bitcoin that the various ETFs have already sucked in, the fact that so many more people are just buying and holding Bitcoin, and they're like, I don't plan to sell. So we've got extraordinary levels of supply compression. We've got low sentiment, and we just haven't had even a genuinely large demand moment. Into one of these, the demand supply balance is just going to be that's my view. If you buy into that, then you can load up, as to say. But I never recommending loading up on anything, because prices can move in any direction. I could be wrong, and then if it doesn't work out, obviously you're going to be pretty angry at me. Sam Roy says, we need your wisdom on Bitcoin. Well, my view is, very clear on Bitcoin. I mean, I think the next big move is up, but people are generally focused on small moves down, and it dissuades people. It makes people sell. And those are the people that are providing liquidity. People wondering where, I've gotten quite a few questions on well, Paul, the Bitcoin ETF is buying, all this Bitcoin. Why isn't the thing spiking? It's not quite enough buying relative to the incremental amounts of selling that is going on. Like I said, from people who have owned Bitcoin for a very long time and just want to cash out. They're like, hey, I missed $70,000 in 2020. That's what I plan to do. I mean, I'm willing to take 68. I'm willing to take 66. I'm done. I just want, USD. I want dollars, and I'm done. But that's that's pretty small supply. I mean, what are we gonna, do when 3 more companies decide that they're going to copy MicroStrategy, that they too are going to put their reserves into Bitcoin. Yeah, where's another 300,000 Bitcoin going to come from? Right? People are focused on where the next 1,000. I want to know where the next 300,000 is going to come from. Yeah, we shall have to see. We shall have to see. Bruce B likes the live stream. Thank you, sir. Thank you for the like. BlackRock cornering the Bitcoin market. I mean, yeah, let them corner it. That's good for us. I mean, rocket the price higher. Hey, BlackRock, go ahead and corner it. I mean, they have to buy like anybody else, and somebody has to sell. This is a scarce, it's a finite asset. You cannot manufacture more Bitcoin. It's one of the most unique things about Bitcoin, which is like anything in some ways, like if a company's stock rises a lot, the company can always choose to sell more shares. But that's because there's a person in charge. They have the availability to do it, in the sense that they can be like, okay, we're going to do a secondary offering. In our prospectus, we've said we can issue 100 million more shares. But with Bitcoin, none of that is there. There is no controlling partner. There is no CEO. There is no management. The number of shares is hard coded in. It cannot be changed. That's forever. And the supply is also hard-coded cut every 210,000 blocks, approximately 4 years, cut by half. So you got all this hard coding that's there. We just need the right moment to come. Some people are going to be impatient, but in my opinion, it's coming sooner than later. Sam, I think I answered the question when Raul asked the same thing. Thank you. Kyle says, where do I see WWR in 5 years? Truthfully, I have not kept up with Westwater Resources in a long time. I know this was a holding when we were at Banyan Hill, but truthfully, we sold this out because I think when we started HEG Digital, we had in excess of 350 stocks or something like that. We're down to 160 or so. So across 3 portfolios, we have between 50 and 60 a piece, and WWR is not one of them anymore. Richard says, I have 13-year stock recommendations from 3 years. They've all been the red for yourself, from 3D Systems to MNTS. Well, what can I do? You pick 13 losers. There's also ones that have been winners. The S&P 500 has 500 stocks, and its returns are driven by 3 stocks. So if you have a portfolio, you're going to have winners, you're going to have losers. The nature of all investing is that the winners will segregate themselves over time, concentrate, and become the largest part of your portfolios. 3 years ago, if you were thinking like that about the biggest stocks in the market today, you would have sold them all. So the nature of investing is that there are losses, there are losers, there are winners, and you have to have a portfolio, and you have to have some time. Each stock goes up relative to a whole set of factors that are unique. And so some of those 13, my bet is that if you hold on over time, are going to end up being large winners. Sam says, Mankind is 475 now. And will you comment on ABSI and EXAI? Well, I'm just going to quickly look. I don't know either one of these. And maybe on one of my live streams, I can just have people throw symbols at me. Yeah, I don't really know either one of these businesses. I can just look at the stock chart, and that the fact that they're, as you say, related in AI would tell me like these are not business related pumps. In other words, they're driven by sentiment. And so you would have to make a decision, which is like, I mean, they're not driven by businesses. It's driven purely by excitement about AI. So you have to like categorize every stock. It's like, what is driving the people who are buying it? The most sustainable buyers are people who are focused on the business. Like with Mankind, I'm like, those buyers are going to be like, oh, this company is going to see billions and billions of dollars worth of revenue over the next whatever 3, 5, 7 years, and they are willing to build a position over time. From experience, this is the way a professional portfolio manager builds a position. You start with a 0.5% position. And then if things go well, you build it to 1%, then 2%, and 3%. And on the way up, you pay more and more. You'll go from paying 3 times sales to 5 times sales to 7 times sales to 9 times sales, because you have higher confidence, greater belief in the company. So you pay more for the asset. Now, with a sentiment-driven stock, where there is not necessarily revenue growth, this is excitement. This is people wanting to get in right now because like there is this moment where people are super focused on this. It can sort of like fizzle out, either because the trend fizzles out or else people just move on from the idea and go to buy something else. So I don't know either one of these companies, so I wouldn't want to say anything about it. Peter asks, any good news on 3D Systems? They did have good news, but the stock has given back all of the jump that it has. Not entirely surprising, given that, like I said, I mean, it's what, a 10-year history of futility, right? I mean, 3D Systems, Stratasys, and in general, 3D printing stocks are essentially back to where they were in 2010. All right. So there would be a number of people who are like, I mean, wow, it pumped 20 or 30%. Let me try and get out. There's an active market now, I believe, for people who are willing to buy at low prices. If I'm right, 3D Systems and 3D printing will be very, very large in the next 3 years. And we're seeing confirmation of the thesis is there, because despite consumer spending going down, right? Despite consumer spending going down, which was released today, industrial manufacturing is still rocketing higher, right? And this is the thesis I laid out last week, which is that because we are reconstructing the supply chain, consumer spending can go down, but spending on making things in the United States is going up. That's what 3D printing does. So if I'm right, over the next couple of quarters, we're going to see surprising information come in that will bring buyers into the stock, and they will bid it up higher. David says, Mankind is the new FMI. I have even higher hopes for MNKD myself personally. What is my viewpoint on Proto Labs? Still holding it from when I was at Banyan Hill. The same thesis that I have for 3D printing also applies to Proto Labs, also applies to Stratasys, which is that go look today, go look at the macro information, go into whatever your source is, do consumer spending. You're like, oh, consumer spending is down, right? Normally when consumer spending is down, it will tell you that like spending on making those things that consumers are buying should also be going down. But because of the reconstruction of the world post-COVID, we no longer want to make every single thing that we consume in China. We're bringing back that back to the United States. That's called reshoring. Building of factories is off the charts. Factory production is off the charts. Why? Because, well, we're shutting down production in China and we're restarting it here. So consumer spending can go down, but to essentially reconstitute the supply chain, we have to invest here. And that, in my judgment, is like 3D printing. I mean, we're not going to make factories in the same way that we did in 1980. We're not going to produce things. We're not going to in the same way. We're not going to recreate the supply chain in the same way. So this is a huge benefit generally to our portfolio, because of course, if you rejigger the supply chain, you have to rejigger the transportation chain, right? We're not set up for us to, transport from like all these like 3D printing farms that are in all kinds of places around the country. We're going to need like, a reconstituted transportation system. We don't have enough truck drivers for us to have a reconstituted transportation system. And in fact, the quantities are so small that like it wouldn't work anyway. So at some point in time, some business is going to start to have to adopt some form of automation, autonomy, and that will drive like another wave of sort of like innovation, applied innovation that benefits us and benefits our stock. So I am bullish. I am bullish. Can you please comment on the up move in Chewy? Well, we added Chewy back into the silver tier portfolio at ATG Digital about like in April. And I just like I've always thought that Chewy is one of like the premier franchises that's out there. It's not like a super exciting stock. I mean, but they are effectively the standard if you want pet supplies. Um, I would say above a certain age, people use Chewy and they get pretty much all of their food, many of their medications through there. But today's move apparently is because the man behind the GameStop trade has taken a position in Chewy. That is drawing his followers in. They are bidding it higher. And that is apparently the reason behind Chewy, because there's no news necessarily associated with Chewy from the company itself. So this is driven by sentiment. But I will say this, that Chewy stock has just gotten smashed so hard, like over the last 3 years. I mean, it got down to 0.6 times sales, which is when we put it back into the portfolio. I'm like, that's crazy. This is a premier franchise. I mean, this is arguably the best like pet, supplies based franchise. They're dominant. They're profitable. They're going to grow. They're going to have more customers in the future who will spend even more money. This is like something where you can sit in and whatever, 10 years from now, they're like, oh yeah, I've made whatever, thousands of percent in this very simple stock. I think someone means exact science that you recommended 3 years ago. Yeah. I'm not sure what that's a reference to, Janina. Exact Sciences is a precision medical stock that, yeah, I mean, has an extraordinary set of assets that are very valuable. The stock hasn't done well, but doesn't mean that the business has no value. They are in the business of testing, and they have a blood biopsy test that, yeah, in success mode, would essentially be able to diagnose the entire sort of spectrum of cancers. Maybe not entire, but a large number of the cancers that are out there. What's the value of that? Well, in my judgment, it's very large, and it's not priced into the stock. Yeah, the stock can be down 40 or 50%, but you could have said that for like, all the big winners that people are very happy about today. How many times in their history were they down 30 or 40%? What was the right move there? Was it to hold? Was it to sell? Was it to buy? Was it to time your way in and out of it? Well, it depends on your investment personality. All right. Some people want to see gains all the time and don't like to see any of their positions show a loss. But showing a loss doesn't mean that the company is terrible. It doesn't mean that that there's no hope forever. And even a fairly large loss in a company that does something real, something tangible, something that has significant benefit can be overcome, right? Because there are cycles in investing, what people focus on. There's growth cycles, there's value cycles, there's things that there's technology cycles, there's new product introduction cycles. And during that period of time, the price is set by the folks with the shortest time frame because they want liquidity all the time. And they're like, I'm down 15%, sell. All right. So that's what swings the price up and down. But Exact Science is a great example. I mean, I think from where I put it in originally, I think it's negative 67%. Now, I own the stock myself, and I've known this company since 2003. All right. I mean, so they have a test for colorectal cancer, but this blood biopsy test, yeah, this is transformational. I mean, once this rolls out, this is going to be a multi-billion-dollar like seller. I mean, and provide huge benefits to patients as well. So that's like the story with many of our stocks today. You're welcome, Shelly. Kyle says, what about TMF? TMF is a leveraged ETF that we did one or two trades in our platinum tier. It's 3x's the return of the 20-year plus bond ETF. And if you think that long-term interest rates are going to go down, this is a levered play on that. We don't own this anywhere, and we are unlikely to own this anywhere. I track it just to kind of like check for like, okay, how 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 bad is the sentiment with respect to um, long-term bonds, and that matters to us because those are long duration investments and innovation are long duration investments. And at some point in time, I'm pretty sure that the Federal Reserve will cut. It will not be a dramatic cut. It will not be 400, it will not be 4%. They will cut probably by 0.5%, maybe 1%. And when that happens, or if that happens, a TMF, will go up 3 times in theory more than whatever, TLT, which is the long bond ETF. So that's what TMF. What are the prospects for that? Well, if the economy continues to weaken, there's any number of like sort of like what I'll call small fires that are brewing all around the economy. I wrote about private equity yesterday. Pension funds have apparently between 10 and 15% in private equity. This is a strategy that's totally dependent on low interest rates. They're struggling. They can't sell anything. So pension funds getting hit, that's an issue. Commercial real estate is an issue. Banks have significant losses. That's an issue. There's a lot of small little fires, none of which amounts to anything near enough to cause a crisis, a crash. But in certain areas, you will see, I think, certain parts of the stock market, certain sectors, certain groups will get taken out and broken. They'll get busted up, and then sort of like that part of the market will be kind of like, we'll find sellers for the foreseeable future. But it's not enough necessarily to have like some dramatic crisis, to have a gigantic problem that drives the Federal Reserve to go back and do like what they did in 2009 and 2010. That's my opinion. Do I believe DDD will hit an all-time low? They have plenty of cash. They just got a deal for $250 million. It could, but into that, I would probably be a buyer, not a seller. That's what I mean. The stock prices go with sentiment, and you have to constantly balance that by looking at the company, the asset, the future of the technology that they have, and the business that they're creating. So it's possible because anything, people will accept any price, right? I mean, think about all the people who sold in 2008, all of these like high flying tech companies. Yeah, I mean, at lows, when sentiment is low, when pessimism is high, when panic is in the air, people will take any price because they're like, just get me out, just get me out. Please just end the pain. So low prices are not driven by financial evaluation. They're driven by an emotional response to the price. So is it possible? Yes, it's possible. Would it mean that like, 3D Systems is a terrible company and a terrible stock for the future? No, the lower the price, the higher your returns in the future. We're seeing no more questions. So I think it's time to end the live stream. Check out my Substack, where we really make a big effort every day to really provide something interesting, informational, and yeah, straight up, like, very short, but, filled with like good information and evidence, stock picks. And yeah, yesterday's was on Mankind. So if you were intrigued by what I said about that, check it out. And yeah, with that, I think I'm going to say thanks for showing up for this live stream. Be back next Tuesday, I believe. And yeah, thank you. Thank you. Check out atgdigital.media. Bye.